Nelson, it's David. I mean, listen, I feel like it's deja vu because we had this conversation with you a little over a year ago when you were trying to get on the board, and then you decided not to. And they're saying the same thing they said then, too, which is they question the relevant experience that you have in terms of the entertainment media business and why you would add anything. They, of course, say that they have an incredibly well-stocked board of people who are fully capable of holding the management team accountable. And again, what's the plan? Like, other than saying they got to do better, what's the plan?
David, you asked it just like I wanted you to. I mean, as written. First of all, this board, from Bob to every independent director, has underperformed the S&P on every measure. 1 year, 3 years, 5 years, 10 years. How much more do we have to go? How long do we have to continue to suffer with this great board? By the way, they said I have no media experience. I don't claim to have any. But I would tell you, I don't think they have much media experience. They broke a record this year. You know that the last 5 movies in a row were losers. Now, if that comes with media experience, I want a guy who doesn't have a media experience. So David, let's deal with facts. The company has underperformed. I made a run at them last year. They promised they were going to improve things. I took them at their word. Things got worse. The stock went down. Results got worse. Okay, so no more. I can't continue to give them more opportunities.
Understood.
And
although, to be fair, don't you need to be fair to compare it to the overall entertainment group? I mean, this is a unique period in time in which, as you well know, there are headwinds and changes that are generational in terms of trying to deal with the move to direct to consumer and make it profitable. So, comparing to the S&P may be a bit unfair, don't you think?
Oh, really? I mean, that's what shareholders who buy stock compare it to, David. But that's a good point. I mean, look at Netflix. Netflix last reporting period did $30 billion in sales, 20% margin. Okay, then you have Warner's. They did $30 billion in sales in media with a 20% margin. Disney, the big daddy, did $50 billion in sales, a 6% margin. Now, that's the competition. Those are the guys who are all suffering through a change from features to streaming. Some have been able to cope with it beautifully. Plus, this company, Bob said it in 2015 and 16, that streaming was a real issue. It was coming. It was here to. It was going to continue to grow. He said that back then, and then what happened? They did nothing. And look what happened to ESPN. The crown jewel of Disney continued to lose subscribers, lose value, and now they're negotiating deals for ESPN out of total weakness. They could have made deals on ESPN in 15, 16, 17, 18. When they saw this streaming thing coming, they said it directly. And
okay,
did
so
nothing
they
about
did
it.
miss that. But we do get a kind of a flavor of what Disney feels about the person you'd like to have on the board beside you, Mr. Rizzullo. It does sound like he was a stalking horse for the largest shareholder, Mr. Promoter. I don't find that wrong, but they do make it sound like that's something wrong there, and that Bob Iger broke Mr. Promoter's heart when Mr. Rizzullo was basically fired, passed over, I should say. Is Mr. Rizzullo, is he better than, say, does he know more than, say, James Gorman about the entertainment business?
At Disney?
Yeah.
For sure. I know James. I don't know how many times James has been to the park. I don't know what experience James has with Disney. And, oh, by the way, James, who I like very much, was given a board seat. He didn't have to have a plan for the company. He did not.
Do you have a white paper that I can see? Do you have a white paper that I can see?
Hold it. He didn't have to set a goal for the company. He got invited on the board. Okay?
Yeah. did.
And I've got to go through these bells and whistles. Hey, guys, I'm the largest shareholder in this company. The largest independent listen to me.
I want to come back to that for a second, Nelson.
Shareholder in this company.
But are you? I mean, Perlmutter is. I still don't fully understand.
Really? Let me ask you
Let me ask the question. Because I am curious about this from a fund perspective. Right, you know, 25+ million of the shares that you are voting, so to speak, are Ike's, and then Trian owns, my understanding is 7+ million. What's your relationship with Perlmutter? Is he paying you? Are you getting fees somehow? Like, you're doing an awful lot here that really wouldn't seem to actually add the economic value for Trian holders, given your relatively small ownership of Disney when you take out Perlmutter stock.
David, I am thrilled you asked that question. Okay? Thrilled, okay? Because every fund around has investors, whether it's a pension fund, doesn't make a difference, whether it's a sovereign fund, and whether it's a bunch of individuals. What the hell's the difference? It's money. These guys want to make money. That's why they give money to funds. We just saved one step. Ike Perlmutter gave us some shares. He said, hey, guys, you figure it out. I don't want to come back to the company. I don't want to be an officer. I don't want my job back. Okay? I just want to make money on my stock because, oh, by the way, when I'm gone, it's all going to charity.
Right, but that's not Trian fund money that went into buying his stock. You didn't buy it from him. He's lumped it in with your ownership stake.
David, what's the difference if a guy gives me a check or he gives me shares? I have the full right to vote it, to do whatever I want with it. What's the difference than if CalPERS gives me $100 million or they give me shares in a company? There's no difference. It's all under my control.